The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the October 14th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes. Hope you're off to a great start of your day. Hey, each of us should always remember this. He who forgives ends the quarrel, and there's been a quarrel between the Bulls and the Bears, they've got the upper hand as we speak right now. Hey, this is a call-in talk show. Sorry for the intro here. Just really manipulating a number of different things as we speak right now. But let's take a look at the Dow. Right now we got Dow futures. They're trading off about 141 points as we speak. NASDAQ off 48. S&P down 22 points. Russell 2000 off about 13. How about that King? How about that King dollar? U.S. dollar index off 536 ticks at the moment. Now I've got a 10-minute delay on that. So we're going to go take a look at the currency market as long as my system stays up out here. The euro, that means that's off to the that's top side. We had gold trade down $10 earlier this morning. May have gotten even a little bit lower than that. Gold futures now up a buck. Silver off of its lows. It's up 4 cents. Light sweet crude back 58 pennies as we speak right now. Our call-in number is 877 927-6648. Internationally, you can give us a call at 727-445-1044. Together, you and I, we can go on our safari hunt, and we can go looking for those bulls and those bears. Okay, so we've had futures trade quite a bit lower. First thing I want to do is, well, let's first go take a look at what's going on inside the currency market. And we'll do that. We'll take a look at the euro futures. I've got a live feed here. Let's go see what we've got going on inside the futures market. Let me blow this up on my screen for us. If you're listening on your mobile device or your sorry, I got so many different things going here. If you are listening on the radio or your mobile device at TFNN.mobi, we appreciate that very much. Hopefully, you get an opportunity to catch either the archive or the live version of this show, and you can see my screen out here. And we're looking at the daily chart here. So the euro, as I've mentioned, the euro is off the bottom. So it should come to no surprise to anyone. At least I would hope it would come no surprise to any of the TFNN listeners. In fact, I'm going to go ahead and I'm going to try to pull up this chart as well. I've got to open up a little workspace out here. And, you know, I've mentioned this before. Where do I call that? I call that my COT charts, my Commitment Traders charts. Let's first take a look at the euro. Now, in the case of the euro, made a nice low out here on the trading session of October the 3rd. Right now, the euro will actually go ahead and form an A to B equals CD to the upside if it can take out the October 9th high. And that price point is 1.2797. If we take a look at A to B equals CD pattern, just to get your perspective, we took a look at the intraday charts yesterday, I believe, inside the euro, just as we do with really all the different pairs out there or any of the futures contracts, just to get an idea as to what the whether or not we're seeing a change in trend begin. Now, in the case of the euro, the 1-to-1 A to B equals CD to the upside would take you into about the price level around 1.2905. I would say 1.2905, 1.2977 would be the price projection here on this next move. That's if it can take out the B point, which I believe that it is likely to do that. We have not seen much of a retracement coming off of the lows here from October the 3rd. Now, again, it should be no surprise. I know that everybody is calling for a euro that's just simply going to get crushed. And maybe over the long term, that's the case. But at this stage here, there's a pit stop. And that pit stop is going to see the U.S. dollar indexes as quickly as the U.S. dollar index went up. You're going to see a fall that you're going to be like, how in the heck can this happen? Now, how can I predict that? Actually, the prediction just comes from taking a look at what the large commercial banks are doing out here, or in this case here, the commercial traders, and take a look at the CFTC data and analyzing it each week. And that data comes out every Friday at 3:30 in the afternoon, you know, barring holidays and things of that sort out here. Absolutely, we had the Columbus Day holiday this week. I don't think that. I think we still get the data at. I'd have to go. They've got a schedule. I think we still get the data at 3:30 this week. Now, what I had been doing in the past, I have been taking an actual weighting. I've been going back to the currency pairs that make up the U.S. dollar index, the Canadian dollar, the Swedish krona, the Swiss franc, the euro, the pound, and the yen out there, and then using the weightings. And that was a whole heck of a lot of math. And so what I did here, and the data shows a little bit differently than the COT data, the Commitment of Traders data that we're looking at right here, right now for the U.S. dollar index. But what we can see here, even though it's not noted on my chart, the line that you're seeing along the bottom here, that line represents the commercial traders as a percentage of open interest and whether they are net long or net short. More net short, really, versus less net short. And the upper end here, the reading that I came up with is 44.4. It's just a percentage, that's all. Just a percentage. And it's almost at the highest reading that it has been at. And that's just taking a look at just simply the U.S. dollar index commercial traders data. If you actually did the currency pairs and did the weighting, the commercials, and this is with the euro getting trashed and everybody out there saying this thing's going to par, and now I don't know what people's time frames are out there. I'm just taking a look at what's going on as we speak right now and then making our assessment. And if you were actually to do the weighting structure out there, and I can't tell you why it's different. I just know that it is different out there. You'll see that we're at the all-time, that the large commercials are suggesting here, they've taken a huge wager. Their wager is, and they're the smart money. They are presumed to be the smart money. Their wager is that the U.S. dollar index is going to fall. Well, the only way that's going to happen is if we see the euro rise, if we see the Japanese yen pull back and get stronger as the U.S. dollar index gets weaker, if the Great British pound moves higher. So it's really those three currency pairs that primarily influence the loonie, the Canadian dollar, as well out here. So it should come as no surprise because everybody's going to say, why is the U.S. dollar index pulling back out here? Well, the euro is going to be one of those key things that we'll take a look at. Again, this is not to give a long-term prognostication, but when you start to get to these extreme levels, you're looking for clues out there. So what does that mean? That means that in the case of Goldilocks, gold is well off the bottom. Gold is going to make a run much higher than where we're at out here. In fact, gold has changed its trend. And gold has changed its trend. That means that the gold miners, that the silver miners, that the whole mining index is changing its trend as well. Now, the interesting thing here is the commercials, they haven't just loaded up on the U.S. dollar index falling from grace out here. They've also loaded up on the on gold and silver moving higher out here. If we take a look at what their position is, with regard to gold, they've gotten down to not the largest less net short, because they're always net short. So large commercials are always net short. When you take a look at folks that are selling forward their inventories, things of that sort, they've always been net short out here. So you've got to measure it as a percentage of where are they at from a net short standpoint. But when the lows were being made, the last lows, significant lows inside gold, that came in June 7th. The weekend of June 7th. This is a weekly chart, by the way, that we're taking a look at. With the what the commercial traders were able to do here 2 weeks ago was get down to a level even below that. Now, you can't use this as a timing tool, but what you can do is you can use this as your triptych, as your AAA triptych, as your TFNN Stevie triptych out here, because it is a guide, is a roadmap as to what the smart money is doing out here. So we utilize other tools. Well, if you take a look at the patterns here, if you're watching this on TigerTV, and you take a look at the A point of an A to B equals CD to the downside, you'd be looking at the week ended March 22nd. 2014. That was when gold was up at 1392.60, makes a move down into that low the weekend of June 6, 2014, gets down to that 1240.20 level, makes a retracement, 70% retracement, 0.618 retracement is what we'll call it. And that was the week of July 11th. Key reversal session, well, not on a weekly basis. It did not have a key reversal session there. It had a key reversal session up here on March 22nd. What do? It makes a 1-to-1 A to B equals CD to the downside, 1194.40. But what was real key here in putting this together with what the commercial traders are doing, look, this is just simply anything can happen, as you know, inside these markets. But let's just take a look at the information that we have. Let's take a look at not just understanding what the commercial traders are doing, but at what stage here do we start to see the rebound in gold? Look, just as Goldilocks on a weekly basis made a key reversal session on March 22nd, and that set up a high, I just throw out to you, if gold makes a key reversal session on the bottom, and we have this information here about what's going on inside the large commercials, what do you think? Do you think there's a chance? And I won't use that other word. You knew what I was going to say. You think I was going to use that S word out there. But do you think there's just a tiny chance that maybe last week's key reversal session has just as much strength as the key reversal session from March 22nd that marks the highs out there? I'd have to say the answer is yes, most certainly. So that's why we're seeing gold do what it's doing. That's why we are seeing, I know there's not a lot of believers out there. And that's okay. I'm just calling it like I see it out here and paying attention to what the big money, what the smart money is doing out here. So now, where is gold likely to head to? Let me go ahead and put our market profiles up on the screen out here. So let me go ahead. Well, I've got the continuous contract. When we get back from this first break here, we'll go take a look at the current contract. We'll go take a look at retracement levels. We'll go take a look at the TAS market profiles, and anything else you'd like. Give me a call at 877-927-6648. We'll go take a look at the futures market as well. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Things price picking up steam to the downside. Dow futures off 179 points right now. Let's go back to gold, then we'll go take a look at what's going on inside the S&P futures. We'll start there. As we take a look at gold, though, I showed this chart here yesterday. This chart here showing the descending price channel inside of gold. This is coming off of the high back here, March 17, 2014. So we can see the bottom of that price channel held. We know there's an A to B equals CD to the downside. That completes there. We know that on a weekly basis we've got a key reversal session. We also know that price is now up and above the resistance level of the TAS market profile resistance zone, 1227. What we saw take place this morning was a test of that area, a test and a rejection. So what that really sets up here is price ought to move up into the top of the descending price channel, where it'll give us our next signal whether or not we've really seen a significant change in trend. Price projection on that, it's probably in the 1300 range out here. The move up here has been pretty diligent, and we haven't really seen much of a retracement. So pretty tough to actually identify a decent A to B equals CD pattern. If I had my feet held to the fire, I'd probably utilize this as our A to B equals CD. That gives you the next stop up at about the 1268, 1282. But the 1 to 1.618 gives you 1299. So I'll stick with the 1300 level projection as to where gold is headed to. It's trading at 1237. So another $70 to the upside before we really start to understand the longer-term change in trend inside of Goldilocks. If we take a look at the S&P futures right now, they're down 28 points. They're trading out at 1847. I mentioned to you, I've been working on a tool, horizontal trading range boundary lines out there. So it's a little bit different than Bud's primary trading ranges. And the reason that it's different is because I've got the power of all the data and a tool where we are taking a look at the co-located opens and closes. So it doesn't matter whether it's an open or a close of the body of a candle. And as you can expect, the open and close of a candle is going to be different on a weekly versus a daily versus a monthly out here. So it's really cool. So what I'm going to do is I'm going to put up the S&P futures just to give you an idea as to where we're at. So if you're watching us on TigerTV, I'm going to go ahead and pull this back. Now, this is taking a look at the ES Mini. And the data that I'm looking at in here actually takes me back to, just so I understand the time frame that this has all been put together, takes me back to 1995. So this is take a look at weekly data going all the way back to 1995. The computer system here automatically generates these horizontal trading ranges. Now, the cool thing is, as we know about, these are just different floors, like a building out here. And if we take a look at what the ES Mini is doing as we speak right now, it's trading to 1847, 1851 area. So we're trading right at that area, just slightly below it. Is a primary, we'll call it a horizontal trading range boundary line. So with the ES Mini on a weekly basis, we're just looking for weekly ranges are going to have more strength than monthly basis. Now I'm going to switch over to a monthly here in a moment. We're looking at a weekly chart, by the way. This should be an area of good support. If this area fails, I'll go ahead and put the midpoint on my line out here. We're looking at, these are the primary horizontal trading range levels out here. This says 1851. If it fails, you could actually see a price move down to 1664. Of course, what we like to do is take a look at that midpoint in between here. But here's the price targets. Let me go put the midpoints in here. The midpoints would say the next level. That was the daily that just put on the screen. Let me put the midpoints for the monthly. That would say the 1758 would be your next target area. Now, what's that 1758? That happens to be your February lows out here inside of the ES Mini. The actual February low for the week ended February the 3rd. The February 3rd, I got to turn this on so I can find that, just so I can tell you what that is. Where did it go? Come on. Come on, where is it? Where is data window? There we go. The February low, by the way, inside the ES Mini was down at 1732. But in this 1851 area, this should act as pretty good support. I'm going to switch over. We'll take a look at a monthly chart. Let's just go. So you note down the 1851. Of course, I can leave this on my screen out here. But let's go take a look at a monthly time frame. Let me come back, and I'm going to turn the monthly monthlies out here. Obviously, we're a long way from where the month is at, but I'm going to turn the month horizontal trading ranges on. I'm going to turn the weeklies off just to make it a little bit clearer for us to see. And if we take a look at 1851, what we can also see here, let me put the midpoints on for the monthly time frame. The midpoints for the monthly time frame suggest that it should find pretty good support at 1827. So between 1827 and 1851 for the ES Mini should be pretty darn good support out there. And that is what's going on inside the ES. When we get back, we're going to go see how this market's going to drop, whether or not it's going to pop. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 275, trading out at 16.39. S&P down 30 points at 1847. Composite off 80 at 41.46. Russell 2000 off 13 points, trading at 10.47. The DAX down about 200 points, off 193. The FTSE's down 130 points, down at 62.61. Leading the charge to the upside here, you've got the ProShares Ultra VIX up 10% here this morning. Lakeland Industries up 20%. That's that hazmat entity out there. Agnico Eagle is in the lead out here, up 10%, up 11%, up $3.20 out here. The Direction shares, the Nugget up 7%, up $1.51 out here. Alpha Pro Tech up 23%. I don't know what they do. Maybe we'll take a look at that stock chart if it stays up on my screen. Leading the charge to the downside out here, Shire PLC up 23%, down $56. That's a stinger out there. Google's off 13, Netflix down 11, Tesla off $10. The iShares Biotech ETF IBB off about $6 right now. GW Pharmaceuticals off 7%, down $4.75. Pioneer Natural Resources off about $5.80. Ulta Salon Cosmetics down $3.80. Baidu off $4.61. Okay, let's go first start taking a look at the Dow. Let's go see what it is doing. So off 280 points out here. Let's start taking a look at where retracement levels might be and so forth. Give me a moment here. Let's delete this. First, let's take a look at the A to B equals CD down patterns out here. So we're going to start here with the high on the trading session of September 19th. That's our A point. Our B point's going to be down here October the 2nd. Need a quick swig of water. October the 6th is going to be our C point. You can see right now we're trading right down into the 1 to 1.618 A to B equals C. That price projection was 16,004.65. We're at 16,024 as we speak. What's the next level? Let's take a look at the 1 to 2 A to B equals CD to the downside. If this area does not hold, the 1 to 2 takes you into 15,746. Now let's go measure expansions of swing points. The expansion of swing points we're going to take a look at is the August 7th low to the September 19th high out here. What you can see is right now you're coming into with a wide-ranging bar. That's not how you like to see patterns completed out here. So we've got a wide-ranging bar today. That wide-ranging bar coming into the 1.618 expansion area. So if this level here fails, instead of looking at additional expansions, what we would look at is other retracements off of other swing points. So let's go do that. So if this level here fails, we're going to pull this back a little bit further, and we're going to take a look at retracements now off of, let me push this to the upside. Let me try to, that didn't work real well. Let me try to expand it a bit here. We're going to take a look at retracements coming off of the February 5th level. This is the Dow that we're taking a look at. So if we come off of the Dow February 5th lows out there to the high on September the 19th, you can see it's really slicing through the 0.618 retracement level. That says that 15,788 is likely the next area where price will try to find some support out there, and that is inside of the Dow. We take a look at the relative strength indicator, relative weakness indicator. In this case, you can see it is in the extreme oversold condition out here. It doesn't mean that it can't move lower, but it starts to get to areas where you should start to see some kind of bounce take place inside of the market. That is on the Dow. Let's go take a look at the S&P 500 trading out at 1841, off 36 points as we speak right now. We can do the same things out here. Let's in fact first start with the February 4th swing point. Let's take a look at retracements there. The retracement off of that low February 5th to the high that was put in here on the trading session of September the 19th. You are now down below the 0.618 retracement level. That number is 1845. You're trading at 1839. If this area here fails, that says 1798 would be the number. Let's take a look at expansions of swing points. Its expansion of swing points, that would be the expansion from the August 7th low to the high that's put in out here On September 19th, you're getting very close to the 1.618 expansion. That sets up a butterfly pattern out here, but you're coming in with a wide-ranging bar. That price projection, 1833. You're at 1837 as we speak right now. If that area fails, it says 1798 becomes a likely resting spot. That is for the S&P 500. Let's go take a look at the NASDAQ Composite, off 85 points as we speak this morning. Down, trading down at 41.42. As we take a look at that, gapping down. If we take a look at the retracements coming off of the same levels, let's go all the way back to the, the actual lower low. So we're not going to use February 4th. We're going to actually use the April 15th swing point low. We're going to go from that swing point low to the high in the NASDAQ Composite that came in on September the 19th out here. What the NASDAQ Composite is just gapped down below the 0.618 level. It says its next area of support is 4,088. If it gets to 4,088, it might as well go test that swing point here from April 15th. And the top of that swing point happens to be, well, as soon as I put my data window, I'll let you know what that is. That happens to be 4,054.80. So you'd have to say 4,054.80 to 4,088 becomes its likely next target. Let's go take a look at the Russell 2000, down 20 points right now. The Russell 2000 giving you the biggest rebounding signal yesterday. You can throw that one out because that is not the case. Now I'm missing, no, I'm not missing yesterday's data. What we know about the Russell 2000, this got a 135-point move, measured move to the downside. I was speaking with one of the Tigers yesterday. We were taking a look specifically at the Russell 2000 because of, and what it actually did very close to doing here yesterday was it attempted again to get back inside that consolidation area. 1079-ish is the number. We actually saw a move yesterday up to a high of 1075.26. It looks like that consolidation level was tested, was rejected. Now you're looking at about a 130-point move to the downside out here. Extremely oversold in the Russell 2000. Nonetheless, subtract 130 from 1079. If I do that, that comes out to what, about 940 or so. At 940, where does that take us to inside the Russell 2000? That takes you all the way back to the June level out here, June of 2013. How about that? June of 2013. At this stage of the game, that looks like where the Russell 2000 is headed to. Let's go check out the New York Stock Exchange. Let's go see if it's busted out the low on the price oscillator out here. Now you got the Dow off 344 points. Let's see if that has occurred, if we've got any kind of, and we do not still yet. This is the amazing thing out here. So as we take a look at that price, well, minus 222. We'll see how the day ends. The level, let me get my cursor out here. Give me a moment to put that up on the screen. Cursor always visible. Always visible. There we go. Okay. So as I take a look at the level that I'm paying attention to, it's really the reading from September 25th out here. Of course, I need my data window. That would be helpful out here. If we take a look at that reading is minus 244. You're still at only minus 222 out here. And if that area holds, man, it still would suggest a potential bounce out here. Right now, it looks like the target area, though, for the New York Stock Exchange should be the February 3rd area. That's the low inside the NYSE, the top of which is 99.70 or 99.92. So 99.70 should be a target, should be its next target out here. But boy, the New York Stock Exchange is in a complete acceleration mode to the what was I saying here? I don't even know. I lost my train of thought because I was multitasking. My apology for multitasking live out here. Let's go take a look at some of these equities here that are moving and grooving. Let's take a look at. Let's go take a look at, since we've got the composite that's really falling apart, the NDX. Let's go take a look what's going on inside the top holdings out here. So let's start off. Let's take a look at Apple. You got Apple trading out right now at down 53 cents, down to 98 bucks. So let's take a look and see what this is doing. At this stage here, Apple has not fallen apart. All Apple has done is tested its market profile low, or very close to testing its market profile low. Get me that cursor back here. Okay, which is at 97.66. Of course, we do know that Apple's got this wide-ranging bar, small-bodied candle, but that wide-ranging candle really is what I should say. That candle session, which was from September the 9th out there, and it's got some volume. So what that really says is that low, if we see Apple get below 97.66, a pretty good bet that Apple will go down and test that level, which is 96.14. But at this stage of the game, the market getting careened lower, Apple is still holding up pretty well out there. That's the number one weighting structure inside of the NDX 100. Microsoft is off $1.42. Let's go see what Microsoft is doing. Microsoft now taking on its swing point down here from August the 6th. That low is at 42.21. 24 million shares, but you've already done 7 million shares here this morning. But that is the swing point that it is testing. Let's pull this back. We know we've got volume up at the highs inside Microsoft, an untested high from September 19th. At some point in time, it will go back up there. Let's go out to our man, John, otherwise known as AKA Z in Philly. John, how you doing this morning?
Hey, Steve. Hopefully I can help reduce your multitasking burden, sir.
Hey, sounds good. Sounds good. What are you looking at?
Hey, Steve, wanted to just chit-chat some parameters on a couple of key indices, the Standard & Poor's 500 SPX, and also the German stock market index, the DAX. First, could I ask you, would you be so kind as to pull up the DAX monthly, please? And could you just recap what you see where we are, and could you reshare with us what the price peaks were back in 2007 and then again in 2011?
Yeah, if we take a look at the DAX, the monthly chart's coming up on our screen out here, and the 2007 high was 81.51. The 2000 and did you say the 2000 and 2007?
2011 and 2007.
Okay. So the 2007 was up at the 8100 area. The 2011 high was right around the 7600 area.
Very good. Thank you on that. I see that in the DEM. That's terrific. I might share an observation with you that is foremost in my mind here as we start to experience some dramatic downside price destruction.
Mm-hmm.
Steve, I will make an observation that the S&P index and the DAX both had double tops 2007 and 2000.
Correct.
And then in 2013, both indices, early in the year 2013, blew over those highs, those double tops.
Absolutely.
I will be watching this 8140 on the DAX, and I see we're currently, 8650 or something. We're coming down fast. And on the equivalent numbers on the Standard & Poor's 500 would be 1576.
Correct.
And what I will be watching very closely in the coming days, weeks, or next 2 months, if we're getting there fast, is if these indices decline to but hold those levels. The idea is just a real simple idea that may come into play here, and that is this. Markets that stage multi-year breakouts often will come back and retest a multi-year breakout. And if we're dealing with a sharp intermediate-term correction now and not a more massive bear market, and of course,
right,
only time's going to tell us which scenario we're dealing with.
Right.
But if we go down and test that 8140 on the DAX and somewhere close to 1575 on the S&P and hold, that will be a clue that this decline is a sharp, severe, but only correction in a massive bull market. as compared to a major league bear market and a major top having occurred here in September. So I just wanted to share with you and highlight that kind of idea. It's just a real simple one, and what I've found in my analytical and trading career, oftentimes, well, preparing is always the best thing.
Absolutely.
And oftentimes the most simplest of ideas have often been the most powerful. Of course, no guarantees, but
no question. And look, the as you pointed out, that 81.36-ish, 81.40 level inside the DAX, it's trading at 86.21 right now, is a top of a consolidation. So for a market to come back, test the top of that consolidation. If it stays out of there, if it rejects it and moves higher, then it's done its normal work and it's ready to move to its next level. Now, if that were the scenario from a planning standpoint, hey, John, can you hold on through the break here?
I sure can, see.
Yeah, the interesting thing, and folks, we'll talk about the importance of that test of that level because it's only a 0.382 retracement off of its last leg. This is Steve Rhodes, John from Philly as well. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 162 right now. S&P down 18. Russell 2000 off 7 points. We're on the line with John from Philly. We were taking a look at the DAX, and one of the things I noticed, John, was if we just simply took a look at the retracement of the last leg, that means inside the DAX, we're looking at a monthly chart going from the low from September 1st to the high that came in on the week ended June 1st out there. And that 8136 area, 8108 to be specific, happens to be the dead cat bounce of 0.382 retracement. So if, in fact, the 8130, 40, 8108 level gets tested and holds and moves up from there, that becomes a very strong A to B equals CD leg to the upside that could be setting up out there. So I just wanted to pass that along if you hadn't noticed the retracement. You probably did, but I thought I would pass that along to our viewers and our listeners out there. Now, you also wanted to look at the S&P 500, correct?
Yes, indeed, Stephen. As I mentioned, let me just sidetrack with you just right here. We've just seen a massive spike off a low, a spike higher in the S&P and the underlying futures. The futures made a low 10-15 minutes ago at 1831. We've just come all the way back up to 1855. Just an idea, namely these wild gyrations, massive volatility are something we should expect. My suspicion here this morning, part of the selling was as essentially margin call selling, long liquidation. A great many players got trapped inside that inversion deal of Shire being purchased, which was canceled and broken apart by Abbey V last night. So the volatility is tremendous, and might just share the idea. It was only 5 trading days ago. Thursday would have been Thursday the 9th that the E-mini S&P futures made a peak at 1968 and down at 1831 just 5 days later. That's down, 137 points.
Yeah.
So it will not be surprising if we form a low soon, then chop around for a bit. But just to get back to that idea, if the S&P happens to fall down towards 1,600, but hold that 2007 peak, 1576, I'll just be taking action and very interested at that point in time.
Yeah, now if we take a look at that, I just got this up on my screen. You can tell the system is acting slow, so lots of action going on in the market out here today because the system is usually pretty fast out here. But, folks, what John's looking at, what you should be looking at as well is those highs back in 2000, 2007 in that 1550 range out here. If we just kind of compare the S&P 500 to the DAX, if price were to pull, that's a pretty large pullback getting back to the 1552. You'd have to say, based on where the DAX is at right now, with it being a one world-ish type market, that the DAX would bust through that consolidation percentage-wise. I mean, just looking at it visually, the fall from where we're at here at 1858 to 1552 is substantially more than the DAX getting back to the top of its consolidation level. And if we just take a look at the last retracement off of its last leg from October in 2011 to the high, the 0.382 retracement level inside the S&P would take it to about 1658. So, hey, Johnny, thanks so much for calling in and sharing with our viewers and listeners out there.
Hey, Steve.
You bet. Folks, stay tuned. The Money Masters Show is up next. If you're off to start your day, have a wonderful Wednesday, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.